Amen. Over to you, moderator.
Thank you so much, Auntie Ruth, for leading us so well in that segment of prayer. And welcome. We take this opportunity to welcome every one of us. And I would like to say Happy New Year. Yes, we are blessed today to learn about managing cash flows and income streams. And our facilitator today is none other than Joseph Kaggwa Mukasa. And I would like to just go through briefly a few things about him. One, Joseph is married to Annette and has been married for over 15 years. And together, God has blessed them with 3 children. One, Johanna, aged 12 years, and 2 boys, Josiah and Joab, aged 9 years and 6 years respectively. And Mr. Joseph Kaggwa Mukasa is a member of Intercessors for Uganda and a member of the YSAVE cooperative, where he has held various leadership positions on both the board as well as the supervisory board. Besides that, Joseph has a lot of experience and in both external and internal audit. For instance, he has experience in external audit with Carl Stanier, Sims and Company, as well as internal audit with Action Aid International Uganda. And he has worked with a number of organizations and companies. One of them is Acclaim Africa Limited, which is a management consultants and training company. And while there, he worked as a team leader of the financial consultancy department. And he has also worked with Smart Consult Uganda Limited. He has also worked as a lead facilitator with Business Development Center, which is BDC, that prepares and nurtures entrepreneurs to start and grow businesses with ethical values. He has worked with the development agencies and industry apex organizations, IAOs, and he has also carried out consultancies and trainings in Eastern, Central, and Southern Africa. He currently serves as a treasurer of Institute of Internal Auditors, Uganda, and he's a member of the Watoto Church Deacons. He's also a board chairman of Alive Medical Services and Educational Institutions. And friends, Joseph Kaggwa Mukasa holds a master's degree in business administration. He is a fellow of Association of Chartered Certified Accountants, ACCA, UK, and is a member of Institute of Certified Public Accountants of Uganda, ICPAU, as well as a member of Institute of Internal Auditors, Uganda. So I would like us to welcome our facilitator today to take us through managing cash flows and income streams. So along the way, we shall be, in case there is any question, we shall be writing them in the chat. Uncle Joseph, you are most welcome.
Thank you very much, Ben. Praise the Lord, everybody.
Amen.
It's an honor and a privilege for me to be sharing this information with you, and I'm forever grateful. Let's start with it. Let me pray again. Father, Lord in heaven, I want to thank you very much that whatever I'm going to say, Lord, may it find fertile ground. Father, give me the wisdom, knowledge, and understanding so that as we share through this presentation, that it will have impact and it will be practical in every aspect of our lives. Father, we thank you and we honor you. In Jesus' mighty name I've prayed.
Amen.
Amen. Great. If you don't mind, I would want to find out in the chat. Can some people ask what are your expectations? If you don't mind, you can send me what your expectations are in the chat room, so then I'll be able to answer the questions. I want to make sure that as much as possible, we are able to share practical aspects of this. Any questions that people may have that I could start answering right away. As you logged in, you had expectations. What are some of those things that you'd want to learn from this presentation? Any questions? I pray that you're able to see the slides, okay?
Yes, we are able to see them.
Okay, great.
Yes.
Any questions that you want to start off with? This presentation is about managing cash flows and income streams. What do you understand by cash flows? Any person can send their answers. Okay, one, Grace, I expect to improve on my financial management. Excellent. Thank you very much, Grace. That is one of the expectations coming from this presentation. How do I maintain a discipline and strategy for side hustles and tailor them to bring in income? Wow. Pamela, thank you. One more person. Expect to improve in financial management. Okay. This presentation, the way it has been prepared, has an aspect of both element of income streams and cash flows, but from the aspect of a business and also from an aspect of an individual. So understanding management of cash flows and income streams, what are some of the challenges we have, and then how do businesses or individuals manage this? So understanding cash flows. So I'll start off with some of the definitions. One, as somebody has already said, it's another way of trying to make sure that we manage our cash flows. One, cash is available money or in various currencies. It can be Uganda shillings, US dollars, sometimes known as disposable income, which is available for spending by a person, so an individual or a business. And when you look at what we call, what we're calling income streams, basically you're looking at them in terms of, you're looking at income streams as sources of money from various investments, work done. And ideally, what we want to do, presentations, one of the requests has been how to make it sustainable. I think it's important that when when you're having so many other income streams, how do you make them sustainable? Is the question that we are trying to find answers to. And then the third thing we're also looking at in terms of, as you're doing whatever you're doing, remember, cash is king. So cash flows are better represented through a cash flow statement or a cash flow forecast or a budget. When you're looking at cash flows, you're looking at the various ways in which you're going to be having income coming through to you. And cash is as rightly Anita said, cash is a lifeblood of a business. Thank you very much. And then the other thing that one of us has said is Ben says he wants more knowledge on how to identify other sources of income. That's something. And then the other thing which somebody has also asked me to do is looking at cash. If we're looking at cash, how to make sure that our family cash flows are steady, that is max, are steady and not visiting saving accounts before month end. Great. Thank you very much for all the questions that I've received. So one, as we go through, as I present, I'll be answering some of the questions along the way. One, when you look at cash, one of the things that we know as cash flow basically is a movement of money, either coming in, just like most of us have been saying, how do I increase the amount of money that comes into our family? So that is money coming in. And then other people are saying, how do we make sure that we reduce on the amount of money that is going out over a period of time? That is another way of saying that you want to have your income more than your expenditure. And as a business, we need to be aware that you can be a very profitable business, very profitable, without yet your cash strained. How can that happen? We shall go through how that can happen. So one of the things that we are looking at in this, how much cash from the various income streams have you received? So income streams basically are the various sources of income. In a business setup, what normally happens is, in a business setup, I'll give an example. I said, as has been introduced, you were told that I served on YSAVE leadership. So the income streams you're looking at, one of the things that YSAVE has purpose to do is to make sure that we maintain at least 50% of our members to have 2 sustainable income streams as a mission. What that means is that, one, it's not enough to just have an income stream. It's also important to make it sustainable. So income streams, you can have various income streams. In a business setup, it may not be that straightforward, because in a business, most of the times you want to concentrate on what the business is going to be doing. The moment you start allowing yourself to go into more income streams, what normally people end up doing is that you'll find that you end up with what they call group of companies. If, for example, you're looking at Mukwano, if they want to go into tea, they'll set up a tea factory and a tea company. If they want to go into plastics, they set up AK Plastics. If they wanted to continue cooking oil, they set up a cooking oil company. So in that sense that they have so many other income streams, but those income streams end up being independent businesses. So that then, as an institution, you concentrate on what your core business is. I have known of another group of company which is called General Machinery. General Machinery, as it grew, it started off as General Machinery, but as it grew, it then ended up having to set up different companies to cater for different business income streams. So you end up saying, for example, you say, you want to go into motor vehicle importation, you say Victoria Motors. You want to go into equipment, Victoria Equipment. You want to go into banking, you set up Mercantile Bank. So you want to go into rentals, you set up Mercantile Properties. So that's how, at the end of the day, income streams can be maintained in a business setup. But in an individual setup, the income streams differ based on what your passion and what your abilities are. So the other thing you have to make sure, as you're looking at income or cash flows or income streams, you make sure that you have more money coming in than going out. In so doing, then you are able to have what we call a saving. I'm glad that on Monday we had Uncle D talking about circles. One of the things that maintain circles is our savings. So you cannot start saving when your income stream is such that the money coming in is less than the money going out. You'll not be able to manage that. So that means that you need to manage your cash flow. If at all you get to a point where your money that comes in is less than the money that is going out, you have to make sure that the money that is coming in is more than the money that is going out. Some of the things that we need to be aware of as Christians is that everything that we own belongs to God, and God has made everything, including money. That's something that we need to be aware of. So even as you're doing your cash flow management, one of the things that I implore you to do is never forget to have the tithe and offering. Never forget to return your tithe and offering as part of the system. One of the things that you need to be very much aware of. Your tithe and offering is non-negotiable. And if you're doing any work beyond what you that attracts income, and you're getting income, make sure that you're also at par with your taxes. Please, as businesses and also on individual basis, one of the things that we need to be aware of now is that as a country, rental income has become one of those areas that you need to be managed very well. It comes with the rental tax, and the revenue authorities, the Uganda Revenue Authority is now very, very hard on people who are not remitting their rental taxes. So one of the things that you need to be aware of as you're doing businesses, there are so many income streams, but one of the income streams now we need to be very, very careful about is rental income. Rental income has become a very, very lucrative business, one, but also it has now come up with the taxes because it has been discovered that a number of landlords are not paying their taxes on rental income. As you're aware that our names may be on title and deeds, but our ownership is only temporary. What we need to do, and know, that's why I talked about the fact that we need to return our tithe. We are just stewards. God has given us this money on earth as stewards. So whatever we do, we need to make sure that we steward this money very well. Negative cash flows affect working capital and may lead to business stagnation. That's something we need to be aware of. So as you're managing cash flows, one of the things that I wanted us to be aware of is when you're coming up with the cash flows, some business, now I'm looking at businesses. When you look at a business, one of the things that all of us who be running businesses or running businesses, and you register a company, one of the things that is non-negotiable is you're supposed to make sure that you have annual returns filed with the company secretary, register of companies. And part of the annual returns is what they call audited financial statements. These 2 minutes or 3, I just want to take us through what the audited financial statements are all about, because there's an element that I need you to know about. One, the components of financial statements are 5. One is what they call the statement of comprehensive income. That statement helps you know the financial performance of your institution. Either you're making profits or you're making losses. That's something that you need to be very, 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 very important to know, that you're either making profits or losses. And the only statement that can tell you that is what we call the statement of comprehensive income. It tells you the incomes that you've made, the expenditures that you've made or you've incurred, and whether you have a balance, which is surplus or deficit. There's also another statement which is called the statement of financial position, what we used to call the balance sheet. This one tells you how much assets you own, the assets you own, and part of the assets you own is actually cash. The debtors, how you manage your debtors is also part of cash flow management, which we're going to be looking at later on. How the debtors, the people who you give services and have not yet paid back. Then also part of that also is inventory or stock. The amount of raw material that you keep helps you manage your cash flow as a business or as an individual as well. So that statement helps you know how much you own, and whether you have a positive net worth or not. And then the third one, which is my point of interest this morning, is the statement of cash flow. As I alluded, it's possible for you to have a profitable business which is struggling in cash, or it's possible to have a very, very good business that has so much cash flows and it is loss making. It's a paradox, but it's something that can happen. So as a business, one of the things that you need to be aware of is that when you're running your business, you need to know that you may be profitable, but not having cash available. And that's something that, so sometimes you find that you don't have cash and yet your business has made profits. And so you ask yourself, how did this happen? So that statement of cash flow helps you reconcile the profits you've made, or if it was a loss, to the cash that is available, either physically or in the bank. Then there's the statement of changes in equity. This one tells you whether your business is growing or is not growing. So that's something that you need to be able to know as a business. Are you growing or not? By the way, even this can also be on an individual basis or a family basis. You can know whether your family assets are growing or not. Growth is as a result of profits or surpluses you're making as a family or as an individual. Losses are maybe where you have money that is going out more than you're getting in. And then the last statement is what they call the notes to the financial statements. I just wanted to introduce this because it's important that as you run your businesses, one of the things you're going to be asked to do is to have, you have to have audited financial statements. I'll continue. Cash flow basically is cash flow management. It's a process. It's a process. It's a process of understanding, optimizing the amount of money, cash or non-cash moving in and out of a business, or even an individual. Let's not look at it just as a business, but even on an individual basis. How much money are you moving? A positive cash flow is more money coming in. A negative cash flow is less money coming in than the business or individual. For example, on a family basis, as a family, one of the things that I try to do is I sit down and ask myself, how much money am I earning? Okay, then how much money am I supposed to now incur as an individual? That is now the country. So when you're doing a cash flow for a business or for an individual, the starting point is you have to start with what we call the opening cash. How much money did I start with at the beginning of this month? This is January. How much money did I start with at the beginning of this month? I put it aside. I said off with 1 million Uganda shillings. How much money? Now, if I'm doing a forecast, because one of the things that we need to be able to do is we have to do a forecast and then also find out whether actually we achieved what we had thought we are going to achieve. So how much money did I start off with at the beginning? I had 1 million Uganda shillings. How much money am I going to earn this January? So now that's where now the cash flow comes in. As a salaried person, I'm expecting salary to come through. If I was running a side hustle, somebody was asking me, how do I make sure that Pamela was asking, how do I ensure that the side hustles are sustainable and money is not running out of that? So the side hustle, so you write down all your side hustles that you're expecting money in. Those are different streams of income. So some of the people, you call it a high side hustle because it's more business, but it's really businesses that can grow. Other people will have other income streams, like, for example, some people will have income streams like, I have shares in various listed companies. So on an annual basis, I expect a certain amount of money to come through via dividends. And sometimes that money comes normally at the end of March or April. So I'll track that. Another source of income is if, for example, my wife and I have a business where we sell garments. So that is also somewhere we can say, okay, I'm expecting money from the sale of garments. But now, in that case, I'll be more interested in the net income. In that case, how much money did we actually sell and how much expenditure did we incur? Did we make a profit on that sale or not? So that is where now I include that as income stream. Some people have, for example, forests, or where you have a forest and you're going to be cutting timber from it, and it's going to be on a maybe monthly basis. So that could be another income stream that you also manage and you track that. Then the other thing that you could also look at under maybe the side hustles is if you have consulting, you might have a consultancy company, so you're doing consulting work. That also, if at all is you're getting it maybe on a quarterly, on a monthly, you also track that. And then maybe trainings, if you're running trainings, and that's one of the side hustles you're running, training can also be a good example of an income stream. So you also list that as an income stream. Then what are the things that are going out? Expenses going out would include rent. You're including rent. You're including fuel. You're including tithe. You're including taxes. You're including donations where you're giving people. And then also savings. One of the things that you need to be able to do is to have a certain amount of money that you've tagged to savings. And then also from savings, the investments. So some of the investments that you can make, for example, now, easy investments of late would be putting money in mutual trusts or investment or in trusts. There's so many companies that are offering trusts. So you can also investment trusts that you can have money into, so that at the end of the day, you have that income coming through at any one time and you manage your passes. But the critical thing is after that, doing your opening balance. So if you're projecting what income you're going to earn, and then what expenditure you're incurring, And then so that will determine whether you're going to have a positive cash or negative cash. So the decision to borrow most of the times is as a result of the fact that now you have a negative cash flow. And it's only negative cash flows that lead to people borrowing. And borrowing is not only for individuals. Even when we hear that the government is borrowing, that means the government has failed to manage its cash flow. That's what it means. That the amount of money that is coming in is less than the amount of money that is coming out. Currently, for example, as a country, to the best of my knowledge, the amount of money that we shall be collecting as taxes that has been projected is 25 trillion. But to the best of my knowledge, we have a budget of about 40 trillion, meaning that then we have somewhere where we need to be getting that money to manage that cash flow. If that cash flow is not managed, then we shall have delays in salaries, we shall have delays in project implementation, we shall have various delays. And that's one of the things that the moment you see a government borrowing, that means that, or if you see an individual borrowing, or if you see business borrowing, that means they've gone ahead and looked at the income streams, they've seen everything that they could get money from. When they remove the expenditure or they minus the expenditure, they realize that they have a negative cash flow. And that negative cash flow, if the business is going to grow, or if the country is going to grow, is only now taken up or replaced, or could be what we could say managed or made good by that deficit through that borrowing. So some of the things that the money we need to be very careful about when you're managing cash flows or your cash flow vis-a-vis your income streams. If your cash flow, after developing your cash flow, you realize that at the end of the year or at the end of the month, you're not going to be able to meet your cash requirements. That's when you start thinking about, can I do a side hustle? The side hustles normally should be as a result of that management of your cash and realize now, if I'm going to be able to do the following, if I have a debt, if I'm going to pay this debt, I need to do something about it because I don't want to grow debt against debt. If I have a payroll, even at home, if you have house helps, that makes up your payroll. If I'm going to pay my house helps and I don't have, what am I going to do about it? If you're going to go into building, capital investment, how am I going to invest if I don't have this cash? And then last but not least, we have invoices in quotes. At an individual basis, what we call an invoice would be people having books at the shops. Some people have shops where you can go and write whatever you need. That is part of now managing your cash flow. If you have a good relationship with your shopkeeper, you can manage your cash flow via the book. And at the end of the month, you come back and pay. So one of the things that, as I mentioned at the beginning, is where we have poor cash flow management, we fail our businesses. Even at an individual level, where we have bad cash flow management, we fail ourselves. And so how do we manage our cash flows? There are three ways we can manage our cash flows. One is when you're making sales as much as possible, if it's a side hustle or it's a real business or at individual basis, when you supply goods, you're supplying normally ladies have shoes and things that they supply in mostly offices as side hustles, as an example. Make sure that, I know people who are very, very meticulous at this, that at the end of, they will come, sell you the item at the beginning of the month, and on the 25th, where payment is being made, they will show up at the office. Make sure that you do not have so much money in credit, because that means that you've locked out all the money in credit, and so you can struggle. So you're making a very good sale, your sales are very good, you're making profits because of the amount of money that you've been able to sell, but you've sold on credit. If you don't manage that, you're going to have cash flow challenges. So you find yourself in a state where you have made so much sales, but all the money is held by people. So you need to make sure that you manage that. That's what's called managing receivables. The other thing also is you need to be very careful if you're doing a side hustle or even in a business. How much stock are you holding? Okay. If, for example, we have a shop, how much stock are we going to be holding in terms of garments, in terms of shirts, trousers, dresses? How much stock? The more stock you hold, the more money you're holding. So make sure that as much as possible, you rather sell as much as possible. You have more turnaround of the cash than actually having lots of stock, which you're not going to sell. So it makes it unviable for you. And then last but not least, how do you manage also what? Creditors. As much as possible, you will hear accountants, those of us who are accountants, they will tell you that as much as possible, take long to pay so that then you're able to use the money as much as possible. You turn it around so many times. But as you're doing that, make sure that you have terms of references which allow you to do that. And the longer you take with people's money, the more you struggle with repetition. Because at the end of the day, you get yourself in a scenario where people say, oh, you're Tasasula. So then you find yourself in a scenario where people no longer want to give you funding or don't want to give you any credit because they believe that you take long to pay. And that means that if you get into that kind of repetition, it will be very difficult for you to get any credit. And that would mean that going forward, people will always be asking you for cash. If you don't have cash, nobody will be touching you. So make sure that you also manage that the creditors, so that the creditors don't run away from you. I know many people who are thriving on credit. You go, you speak to the suppliers very well. The moment the suppliers realize that you're a good person, then you realize that actually they can give you things on credit. You sell and take back the money. As Christians, let's be as honest as possible that whenever we are given credit, we should be willing to pay. One of the challenges that microfinance institutions are facing, and I will see that having been serving on some of the credit institutions that I know, you realize that some people borrow with an intention not to pay. So from the word go, a person goes and he borrows and he knows he's not going to pay. And then he starts going into legal gymnastics to ensure that they don't pay. In such a situation, you find yourself as a business being blacklisted, never to be given money again. Please, if there are any questions, you can always keep them coming. And then from the biblical sense, one of the things that we need to be aware of as a business or an individual business, need to plan your cash in and cash outflows. Income streams. One of the things that we need to be from the biblical side, put your investment in several places, many places even, because you never know what kind of bad luck you're going to have in the world. That is Ecclesiastes 11:2. This, from the biblical point of view, one of the things they're encouraging us to do is, yes, 1, plan your income streams. 2, plan to save, but after saving, please make sure that you invest. But also, when you're investing, make sure that you invest in several places. Don't put all your eggs in one basket. At individual level, people are saving in various places. You can either try to save in this. This has been part of the series. I remember Gloria talking about the various investment options that you can have, either investing in treasury bills, investing in trusts, investing in actually, you can also invest in what? In trusts, treasury bills. You can invest in stocks. That's another area which we have not done very well as a nation, and yet because we don't have so many companies to invest in. But now there's an option where you can actually invest on the New York stock market. As you're aware, there are certain organizations or companies that have made it easier for us to do that. But as you invest, make sure that you invest in various areas. But also when you're investing, make sure that you invest in a place where you have comfort. Don't invest in areas where you don't have, where the risk is too high. You need to look at your risk appetite. How much money are you willing to lose if at all something went bad? And that's why you invest. One of the investment areas about 5 to 10 years ago was forex trading. It was high risk, and at that time people were getting high returns. But at the end of the day, when it collapsed, so many people lost their investments in that because of the fact that some people did not understand the risk that they were going into. Luke 14:28-30 talks about managing of our cash flows. And so it says, do not begin until you count the cost. So one of the things, when you're doing a budget, one of the things you're doing is actually managing your cash flow. One of the things that we do normally when you're budgeting, which people never see, is that there's a tendency for us to do a budget. All you do is you see expenditures at individual level. But it's also important that when you're doing your budget, you also ask yourself, where am I going to get this money from? Talk about the income streams. A typical budget, which we all normally get as individuals of late, is you'll get a wedding budget. People are going to send you budgets for wedding. One of the things that I never get to see in a wedding budget is, where is the income going to come from? Without you knowing, when I send you a wedding budget without income, that means all the income that I anticipate is actually from you. So if a budget was 20 million and I have not indicated whether I have any money that I'm going to put there, that means that all the money that you're seeing there, I'm expecting you to cover it, and maybe by grace of God over and above, so that I have some extra to go for honeymoon. That's now what a wedding budget means, if at all you don't have any income aspect to it. So otherwise, one of the, as I was reading, please do not begin until you count the cost. For who will begin construction of a building without first calculating the cost to see if there is enough money to finish it? Otherwise, you'll complete only the foundation before running out of money, and then everybody will laugh at you. They say there was a person who started building and could not afford to finish it. Those of us who have been in the construction arena, this normally happens at the stage where you find that at a point where you're almost coming into the house and the finishings become tight. And sometimes it's not that you didn't have the forecasts. Most times you've asked your engineer to do for you BOQs, but along the way, things change. But as they're changing, make sure you're managing that. A typical example where cash flow really becomes a challenge is when you're doing construction. If you don't manage that cash flow, if you don't manage that cash flow or your cash flows when you're doing construction, you can end up with a building which is unfinished. So as I come to the end, one of the things that we need to be doing, once again, review income streams. What risks are involved in each of the income streams that you want to go into? As much as possible, diversify so that then you don't have to get into a scenario where you cannot afford, or where you get yourself in a scenario where you lose everything as a result of where you invested. Then every business needs to prepare a cash flow forecast, or even individual. When I'm talking about a cash flow forecast, don't look at it as a complicated thing. All you need to do is just look at how much money do I have at the beginning of this morning. I'll start off with this morning. How much money do I have at the beginning of this morning as I prepare my cash flow, as I manage my cash flow? I have 100,000. How much money am I expected to earn, or am I expected to get? I don't expect any money this morning, unless it comes by the grace of God, but I don't expect any money this morning. But what am I going to pay out? I'm looking at, most likely I'll have to incur fuel costs. I might have to incur lunch or maybe food. And then I also have to leave money home to purchase possible items at home that may not be available, whose list was already prepared yesterday night. That's what we need to be doing. And then last and not least, if it's a business, review your business plan with the strategic analysis of the income streams and project your cash flows. If you're looking at most business plans, one of the things that they do very well is to project how much they're going to spend. But also one of the things that you, who is a business owner, make sure you also ask yourself, how much money are we planning to earn as a result of this business? And then really, by and large, I pray that as we go through this day, as we go through this month, may the Lord of peace himself continually grant you peace. May he give you the knowledge. May he give you the understanding. I pray that you'll have wisdom to be able to manage your cash flows and your various income streams that the Lord will enable you to earn. And without any further ado, I want to say thank you very much for listening, and may God richly bless you. Please, you're free to ask questions along the way, or right now it's 5 minutes past 7, so we have some good time for us to engage in the question and answer. Thank you very much. May God richly bless you all.
Amen, amen, amen. Thank you so much, Uncle Joseph, for this wonderful and elaborate discussion on cash flows and and managing cash flows and income streams. And yes, as I said, I want us to join to appreciate him through our chats, and through those, please write those appreciations to Uncle Joseph for this great indeed, great presentation. Many of us have been able to learn a number of things here. And as he said, we still have some good time, and I would like to, in case there are announcements, but one of them, I believe, before the questions come, because I can see in the chat, there is a question which is already there. Yes.
Yes, you can answer that one right away. The first question I've seen in the chat is that as a contractor, one of the things that as a contractor, what do you need to do? Because in a contract setup, you cannot predict. There are certain types of businesses, like being a contractor, it's hard to predict your income beyond the project. Yet many are short-term, the overheads remain. However, what advice do you have in managing the cash flow in this scenario? My question would be, one of the things that we need to be able to do is, as you're doing this business, make sure that you learn the art of how this business is run. And one of the things that you need to be able to do as a contractor is, I know that what they call certificates of completion. And depends, that would be in a very organized setup, but in a setup like where you're maybe constructing my house and I don't give you certificate of completion, it may be difficult to predict your income. But one of the things that I've learned from some of I've been involved in construction. One of the things that I learned, some of the contractors actually iron out or put it very clearly that this is supervision fee. And when you're when the person is going to be engaged, the moment you send them the money, they take off the supervision fee, and that is their income. So that is now money that, as long as I'm in this business, I need to make sure that I have a supervision fee clearly laid out, depending on other businesses. But for construction, in particular, as you mentioned, one of the easy ones to pick is supervision fee. The other one may be difficult, where you refer to some of the money, because some people, as contractors, they make off money also of this labor. So if you're making off the labor, it may be difficult to predict. But as much as possible, make sure that you also manage your cash flow in terms of what, because when you're going into a contract of that nature, the thing that you need to be very careful about is you need to have your overheads well managed. Write down what your overheads are and make sure that you manage them very well. If you don't manage your overheads, you can never make money off construction. Thank you very much. Please ask the questions.
Okay, thank you so much. Please, in case you have any other question, you can unmute and ask, or still write it in the chat, and it will be, yes, there is one here from Joshua Kisuvika, and he asks, there's a question here where he asks that, thank you so much, Joseph, excellent presentation. Kindly draw more light why we badly need these audited statements you talked about in business. Over to you, Joseph.
Thank you very much, Joshua. I would take it in terms of, there are 4 main reasons why you need audited financial statements as a business. The 4 main reasons you need financial statements audited as a business. Number 1 is accountability. For every business that we get into, we need to be seen to be accountable to the various stakeholders, including yourself. You may be the only director. The only way you can know that what you're doing is right is by having audited financial statements, which will be, because when you prepare your financial statements, somebody else comes and certifies that actually what you've prepared is correct. So what that means is that there's confirming that the income you've stated there is correct, the expenses you have there are correct, the assets that you claim to own are there, the liabilities that you claim to owe as a business are actually accurate, and so accountability is number 1, non-negotiable. Number 2, a business which has audited financial statements, even from the tax point of view, is obviously seen as a credible business. So credibility is very, very important. Credibility is important as a business. When you don't have audited financial statements, the credibility of your business is put to question. Number 3, by the time you're able to have audited financial statements, that means you've allowed somebody else to come and look at your books. So you're financially transparent. You're financially transparent. And then last but not least is it's a legal requirement. Whether you like it or not, if it's a business, you'll be required. In certain jurisdictions, in certain countries, they normally have thresholds. They say, at this point, you don't have audited financial statements, but as much as possible, if it's a company limited by shares or guarantee, make sure that you have audited financial statements, because at the end of the day, without audited financial statements, you're going to be seen to be being an illegal entity. And one of the things that normally you're required to do is to file your annual returns with the Register of Companies. And one of the things they will ask for are audited financial statements. So by and large, if you want to remember why you need audited financial statements, you say act legal. A, accountability. C, credibility. T, for transparency. And legal is a legal requirement. So whether you like it or not, even as the first 3, you may forget about the first 3, but if you're going to be doing business in the kingdom way, you need to be audited because it's a legal requirement. Joseph is asking, wow. Joseph Oyang.
Yes.
There's need for balance between setting up your business up for growth and keeping overhead costs low. What advice do you give as a minimum position? At this point, really, it boils down to your strategic plan or what you believe. Yes, because if you want, this is driven by your vision as a business person. What is your vision? Where do you want to see yourself in the next 5 years? And where you want to see yourself in the next 5 years will determine how much overhead costs you may want to incur. And as long as there's a justification of incurring them so that the business grows, then you wouldn't worry much. So it's a delicate balance, but it boils down to where do you want to see yourself and how much investment do you want to make so that you're able to grow. If you're able to balance out that, then you're good to go. Thank you, Joseph.
Okay.
Yes.
Yeah, thank you so much. Wow, these are very, very key. And I would like also, as waiting for other questions to come in or other people to unmute and ask. Yes, in one of the in your presentations, you mentioned something that by the time you borrow, that means you have failed to utilize or to use the money that you have. So that is why you can be able to go and borrow. So in other words, my question is, do you in any way discourage people to borrow money in as far as business is concerned, or what? Maybe you need to throw more light on that.
Thank you very much, Ben. That's a controversial question in one way or another, because the Bible says the borrower is a servant or a slave. Sorry, is a slave to the borrower. So it boils down to, what are you borrowing for? I think that's the most important thing. Why are you borrowing? So if you're borrowing because you've done your cash flows and in such a way that if you only borrowed, the money that you've borrowed is able to get into this business, grow the business, and then that business is able to turn around the money in a manner that you're able to even, as long as the most important thing is, please, when you're going to borrow, make sure that you have the capacity to pay. That's the bottom line. You may have the collateral, you may have the cash flow looking but ensure that the bottom line is, make sure that you have the capacity to pay. If you don't have the capacity to pay, do not borrow. That's my advice. If you don't have the capacity to pay, do not borrow. The capacity to pay could be in 2 terms. One, if you're borrowing and it's going to do a business, you've already seen that the amount of money the business is able to churn out it will be able to enable you pay the loan. Then you have the capacity to pay. At individual level, the capacity to pay may be that you're going to use your salary to invest. You get your salary, and that salary is able to pay that loan as you continue investing in whatever you're investing in. The bottom line is, do you have the capacity to pay? If you don't have the capacity to pay, please do not borrow. Bottom line.
Okay, thank you so much. Thank you for that highlight. Another question from Sarah. It says, how do you get to increase cash flow in a charitable organization?
Simple.
Or what?
Fundraising.
Okay.
That's not the way. As long as the moment you say the charitable organizations get money through fundraising. But of late, most organizations have been struggling with fundraising, and what they have done is they have gone into what you call social enterprises. They go into business areas where they're able to make money, and then the money, for example, use like Watoto. Watoto has a social enterprise where there's W Cafe where they're able to sell coffee and the related eats, and that is able to create a profit, and it's the profit that comes from that is able to help run some of the homes. Other institutions will go into maybe rental. For example, the biggest foundations that we have in this world, Ford Foundation, Carnegie, and all those that we know, MasterCard, what they have done is they have invested so much in rental properties in those developed countries, and some of them have also invested so much in stock. So when you invest in those, that is the other way in which charities are able to make money or increase your cash flow. If you're a charity, investing in aspects, but we need to be very careful. When you start going in that area, URA gets interested. So we've had institutions where you start off as a charity, you go into investing into businesses, and then when you're there, URA now comes and says, yes, although you're a charity, you're now starting to do business, so can we start paying taxes even if you're not paying taxes? So you have to be very careful in whatever business you're going to go into as a result of not to attract URA at your table or at your desk as a charity. Yes.
Thank you so much. I can see a hand from Joshua. Could be.
Yes, Joshua.
Yes, Joshua, you please ask your question before we can read the one from John in the chat.
Thank you so much, Joseph. I wanted to understand, after preparing this statement, I need to know how to analyze this data to know that the business is is making a profit or is making a loss. That's where I wanted more interest. Maybe in that presentation, if you can go back to those slides where there are audited statements. So in each of those, now how do I know in each of that? Now here is because if I'm preparing them, the aim is knowing that the business is making a profit or a loss. So analyzing that data is my major concern. Thank you so much.
Joshua, thank you very much for that good question. As a business grows, you'll find yourself required to have an accountant or somebody who will be running your accounts. And that person who will be running your accounts may have, the moment the business grows, it will go to a point where you will also require a software. So you don't need to worry if your business grows to a point where you need a software. These financial statements can be generated from the software. But at a point when you don't have a software yet, at a point when you don't have a software yet, I could say the financial statements that you need to be looking at, I talked about the statement of comprehensive income. The statement of comprehensive income. That statement of comprehensive income helps you know, or some people used to call it profit and loss. So it used to tell you whether you made a profit, just from the word profit and loss. It tells you whether you've made a profit or you've made a loss. So that statement tells you how much income or revenue you generated as a business, how much expenditure or expenses you incurred as a business, and whether you made whether the difference is positive or negative. If it's positive, that means you made a profit. You go and celebrate, pay your taxes, return your tithe to your church. If you made a loss, you start praying about it and make sure that you have some changes in strategies. So the statement of comprehensive income does you very well. But also, secondly, the statement of changes in equity helps you know whether your business is growing or is shrinking. If, for example, your net worth last year was 2 million, and this year your net worth goes to 1.5, then you start praying about it, because then you might be heading to liquidation or your death.
Now, Joseph, on that, in our business, it's a Christian, of course, it's a Christian business, a social enterprise, a hospital we are running. But then we had pulling of ropes with the director. I'm the hospital administrator, but I had I was pulling ropes with the medical director, and he was saying we should pay tithe on a daily basis. I was saying, no, why don't we pay tithe at the end of the month, and or at the end of the year? And he was like, no, we need to pay tithe every single day. So because he's my boss, I had no option but to leave that option. So I want to know, is it okay because it's now one of the things we do even before, when the day closes, we have to remove the tithe and then put it in an envelope to go to the church. Is really that applicable, or we need to know after making whether we've made a profit or a loss at the end of the month or at the end of the year? When should we pay this this time?
Thank you very much, Joshua. This is a very good question, and it's one of the questions that most Christian enterprises struggle with. Those of us who have been long enough on this platform, you notice we shared this already. The ideal scenario would be you return your tithe at the end of the year when you've done your audit, so that then you know whether you've made a profit or a loss. As an example, as I mentioned, I used to be a leader in YSAVE. YSAVE, as an example, we return our tithe to our mother church at the end of the year when we're sure. But also, once you need to be able to know that tithe is not tax allowed. The taxman doesn't allow tithe. So when you're giving tithe, it won't be seen as an expenditure in tax purpose, for tax purposes, just for you to be able to know that. The moment you're returning tithe is not seen as a business expense. We need to be mindful of that. Thank you.
Yeah, thank you so much. I know more conversations will go on, but Joseph, there are two questions in the chat here. One from John Kisaka says, in Uganda, we tend to run businesses in a very informal way with very sketchy records. And often we see audits as an unnecessary extra expense. How best can one turn an informal business approach into a formal one? Issue about good record keeping and not just to be informal. And then the second question will be is that how can a pastor who works full-time raise their finances? Back over to you, Joseph.
Thank you very much, John Kisaka. What I've advised businesses, there's always a starting point. If you there are some very good auditors who are Christians in town who do not care about how bad your bookkeeping is. The first year, you'll have challenges. So you invite a person who will look at whatever, even if the most important thing at this point is when the money is going out, you write in a book somewhere that the money went out. You may have receipts, you may not have receipts. Along the way, once this person comes and is able to review what you've written, just make sure, as far as bookkeeping is concerned, you don't need complicated receipts and the rest of that at a certain point. But just make sure that you have a record of whatever is going out. As in your cash out, what is your cash in? Just be as simple. How much money came in today? You write it down. How much money came out? You write it down. And then at that point, you sit down and then you give it to them. They will prepare the financials. They have the capacity to prepare the financials. And then going forward, is when you start having those conversations of, now what receipts do I need to keep, so that next time when you come to my business, I don't have to struggle getting this. But the starting point is get up an auditor. There are some auditors, you tell them from the front, up front, that, you know, I'm a small business, I've not been keeping good records, but make sure that I want to start from somewhere. And then from that point of view, they will give you the contact, they will give you the requirements, you give them whatever requirements you need, and they will start off from there. I've been part of the businesses. When I used to work with Castanya Sims, it was, and it's still, it was set up to serve Christian charities and businesses. So it did not matter. All you needed to do was just make sure that you've kept record of your inflows and outflows, and the rest of that would be done by, the rest of that was always being done by the auditor. So we'd have a team which would come and try to do the accounting work, and then we'd have another team that would come and do the audit aspect of it, of what has been what has been prepared as the accounting. Then business, somebody is asking, how can a pastor who works full time raise their finances? Now that's an interesting one. The question is, I'm throwing it back to the person. Is the pastor paid by the institution or the ministry? Because if the pastor is being paid by ministry, which some ministries now do, pastors are paid salaries, or if in some places they are paid allowances. So from those allowances, if they prepare a very good cash flow and they realize this is the amount of money I'm earning, these are the expenses I'm incurring, if they're having deficits, then they need to raise their finances. If they find that they're in a place where they're having surpluses, then the surpluses can be invested in other investment vehicles, which investment vehicles then would generate finances for them. That's what I would look at. Yeah.
Okay, thank you so much. As we are winding up, we have, yes, Uncle Joseph, people are asking for your contact. Please, you need to share your contact with us, because another person asks if there is any other Christian auditors that you can refer to, so that when there is need, we can be able to reach them. And then I just want to ask, I saw here one more. Okay, I think the question is, yes, someone asked something about tithe, and they say if tithe is not considered as an expense, how do you then reflect it? Then from there, just in 1 minute, then I'll be able to go through a few announcements, and then we close this session. So I don't know whether Uncle Joseph, you can say something on if tithe is not considered an expense, how do you then reflect it?
Okay, what this means when you're doing your tax, what I mean by being considered not being an expense, what would happen is that when you're going to pay your taxes, what they do is they say, how much income did you receive? If, for example, at the end of this year, I received 2 million as my income, and then I returned a tithe of 200,000, and then I had expenses of 800,000, and my profit is 1 million. So from the tax point of view, my profit is not going to be 1 million. The tax man will look at my profit as 1.2, meaning that they will not see my 200,000 as a business expenditure. So they add it back to the profit, and they tax me at 1.2 million instead of taxing me at 1 million. That's what it means by saying that it's not tax allowable. Okay.
Thank you so much. As we conclude, just a few announcements. Yes, our money and stewardship series still continue. We are left with only two sessions to go. One will be on Monday the 16th, and then another one will be on Friday next week. And next week on Monday, we shall be handling managing debt by Pastor Michael Kintu, and then we shall conclude on Friday. Today, we shall have a praying moment through the topics that we have been handling, and the session of prayer session is at 10 p.m. So please, endeavor to be part of this, and I know it will not remain the same. So yes, if I think that is those are the two announcements that I had, and at this moment I'd like to, as we conclude, I know the conversations will continue on the chat. I know Pastor Uncle Joseph will share his contacts. Okay, has already shared his contacts here. Please let us get in touch with him, and we need to be helped as Christians, as believers, so that we don't make mistakes in whatever that we do. So I just let me say a prayer and then we conclude. Father, in the name of Jesus, we appreciate you and give you glory for this wonderful session. And even as we move to offices and places of work and back home, those who are remaining at home, we pray that you'll continue to make this knowledge to sink deeper in our hearts and make meaning in our souls, that we live as knowledgeable people in order to help and expand your kingdom. We bless you and we honor you. Make our lives to be a blessing today. Thank you so much. And in the name of Jesus, we pray and believe. So thank you so much, friends, and allow us to unmute and share the words of grace as we go. The grace
of our
Lord Jesus Christ,
and the love of God,
the fellowship of the Holy Spirit,
the Holy Spirit be with us all, now and forevermore.
Amen.
Amen.